Hi there. This is very different. I'll explain to you in just a moment why, because I'm sitting in my home, not in the studio as usual. I had contact with somebody who later tested positive for COVID, so the whole family unit is busy in isolation for the entire week and last weekend and this coming weekend. Hope you had a good Father's Day yesterday if you are a father. As I say, coming to you from my home for the whole of this week, so it could be very interesting, to say the least, between our 11-year-old Staffy, who suddenly goes into a barking fit, and our rescue dog, who then decides to join the Staffy. I hope that they will keep quiet when we are on air, but if it does happen, then you know what? C'est la vie. Monday morning, and that means it's time for us to delve into things business-like. Chris Gibbons joins us from his studio. This is the first time we're doing this, Chris. It's quite interesting and very different. Nice to have you with us again on a Monday morning. Let's go back first, because I want to get to two stories that have been breaking lately. Two recently announced deals which seem to be falling apart. We'll get to those in a moment, but quite a week on the global markets with some major realignments and all down to the Fed. What happened there?
Good morning, Jeremy. Yep, absolutely. And we'll hold thumbs that your isolation works out for you. Definitely not isolated global markets from whatever the US Fed says or does. So let's set the background here. As we know, we're in the middle of a pandemic, and governments and central banks have been pouring money into economies to try and keep them going, to try and keep businesses alive, keep economies alive, and so on and so forth. So billions and billions of dollars and rands and reals all sloshing around in the global economy. And we know that when we have too much money, chasing too few goods, we get this thing called inflation. So that's pretty obvious. Now, when does the easy money tap get turned off, and how sharply does that get turned off? There's been a lot of speculation about it. People are saying we know that inflation in the United States is going to be high this year. Therefore, sooner or later, the Fed's going to have to do something and put interest rates up from their current historic lows. No, the Fed has been saying, no, relax, we've got it under control. There will be a little spike in inflation this year, but we're not going to bother putting interest rates up, won't need to until sometime in 2024. Last week at the FOMC, Federal Open Markets Committee meeting, they changed the tune. Suddenly the spike in inflation is a hell of a lot higher, 5% at the moment in the United States, the highest since the summer of 2008, and whoops, we're going to have 2 interest rate hikes, and they're going to be in 2023. Seems a long way off, but it was the speed with which the Fed changed tone that jolted the markets.
Okay. And what impact did that have on the markets, Chris?
Well, let's just take a look at some of the numbers, Jeremy. Our own JSE, of course, up 10.5% on the year so far. We took a bit of a knock, down 3.1%. The Dow in New York down 3.2%. This is on the week from Monday to Friday evening. 3.5%. The S&P, sorry, that's the Dow. 3.5% on the Dow. S&P 500 1.9, and the Nasdaq. The tech shares held up quite nicely. Was down, but only 0.25% or so. London down 1.6%. And along the way, I must point out that we got hammered in terms of the gold price and the platinum price, because bond yields coming down in the United States, our bond yields going up, but also people moving out of gold and going into US treasuries, bond yields going up there, bond yields coming down, bond prices going up, yields and prices move in inverse correlation. So we got squeezed on both sides of that trade, and China has added to our woes by saying resources prices, coal, all that kind of stuff, copper, they're too high, we're going to bring them down. So our resource players like Anglo American and BHP, they got smacked as well. Very rough week all around. I must just say that we are up 10.5% for the year so far. If you'd said to me on the 1st of January, will you take 10.5% on the 31st of December? I might have been tempted to say yes, but I think we're going to do a bit better than that. And Tokyo this morning, by the way, we're carrying on. Tokyo is down, it was down 4% at one point. now down 3.5% in that sort of zone. So I think we're in for a very bumpy few days.
But commodities also taking pressure, but that's not just down to the Fed.
Yeah, as I say, this is the Chinese getting involved here. China has inflation running at about 9%, producer inflation, 9%, which is very, very high from a Chinese perspective. Producer inflation gets passed down the line about 6-9 months. It emerges as consumer inflation. They don't want that. And they've just said to the commodities producers, look, the prices have to come down. They're artificially high at the moment. And if you don't take action, we will take action. And that, as I said a moment ago, has really depressed some of the commodities players.
So where from here? How are we positioned now?
Well, I think it depends on who you believe. You may be familiar with a gentleman by the name of Michael Berry, who featured in a movie called The Big Short some years ago. He called the collapse of the market in 2008. He is saying markets are going to be in for the words he used, the mother of all corrections. That's 20%, 30%. A couple of other economists on the markets this morning are saying 20% corrections. I'm not so certain. I think that the smart players would have seen with all this money sloshing around, we know it's out there, we know that we've got to be defensive in our positions and so on and so forth. I think there'll be a correction. I don't think it's going to be as dramatic as 20%.
Okay, let's go back to those two stories I alluded to at the beginning of this chat, Chris. Recently announced deals that have developed, for want of a better words, question marks, to say the least. The first is the car powerships plan that part of the emergency scheme to add electricity to the grid. Firstly, what's the problem with that one?
Well, there are a number of problems with that one, Jeremy. The initial announcement that car powerships had got the bulk of the emergency power deal was followed immediately by court action from one of the losing bidders. And then we started looking at the deal a little bit more closely, and we looked at the length of it. It's a 20-year deal. What kind of emergency deal, be it power or anything else, runs for 20 years? Suddenly there's a little bit of an aroma creeping up from that one. Then it transpires, following an investigation by Amar Bungani, that the company, Car Powerships, Turkish subsidiary of a Turkish company, Karadeniz is the parent company, they have a string of corruption allegations against them. There's a big one going on in the moment in Lebanon, and another very big one in Pakistan. And just to round things off, the Green Scorpions are also investigating whether or not the consortium or its environmental consultants provided misleading information to the Department of Energy, Minerals and Energy, to secure an emergency exemption from stringent provisions of the National Environmental Management Act. So all in all, there's sort of little aromas drifting around, you know, bit sort of.
Okay, well, you're good at sniffing around as well. What's your view? Is it going to happen?
Jeremy, I'm going to stick my neck out on this one and say no. I think the environmental lobby is very powerful, and we have an environmental minister, Barbara Creasy, who is extremely principled. And if there's the slightest doubt about the impact of this deal on the environment, I think it's going to go. We'll leave all the corruption allegations. Car Powerships deny all corruption, deny all of those allegations, as you would expect them to. But I think the environmental thing is going to scupper this one.
Yeah, deny. Oops, yeah, it was me. Sorry. Okay. The second and perhaps the more damaging one here is the partial privatization of SAA, which has developed some, once again, for want of a better phrase, some very curious features.
Well, that is the case. And I think, again, at the start, it all looked so promising. We had Public Enterprises Minister Pravin Gordhan announcing the deal, 51% of SAA to the Takatso consortium. Takatso is a combination of Harith General Partners, Global Aviation, Gideon Novik. You know Gideon as well as I do. Co-CEO of Comair, founder of Kalula.com. No one in this country knows more about the aviation business than Gideon. Harith is run by a gentleman called Chepo Makhlwele, formerly a big cheese at the Public Investment Corporation. The PIC still owns 30% or so of Harith. So is this a sweetheart deal with the PIC or not? The PIC says no. Question is, will government employees' pension fund money be used to fund the acquisition of SAA? PIC, as to repeat, says no. The consortium says no. So where's their money coming from, I wonder? Where's the $3 billion that they need to get SAA back into the sky going to be coming from? The deal may not even be a deal. Daily Maverick reporting that the consortium has still not completed its due diligence, and there's no formal offer yet on the table, contrary to what Praveen Gordon has said. And it's also suggested, as I say, the money is just simply not there. And the other interesting question is, has the Department of National Treasury given its approval? Because the various reports I'm seeing say DPE, Public Enterprises, has not bothered to consult on this one with National Treasury. And we're thinking here about Public Finance Management Act and so on and so forth. All of which brings us back to Gideon Novik. I saw a tweet during the week from the deputy editor of the Financial Mail, Giulietta Talevi, saying, this is all very curious. Gideon Novik's reputation is on the line. And then in Business Times, Sunday Times, yesterday, up pops Novik himself, and he's absolutely categoric. He says no public funding will be required. We can get the money anywhere we want, the $3 billion. We're going for a local lender, investor. We've had offers from overseas. We want it to be local. He is absolutely bullish. And the question of due diligence, he says there's been so much revealed during the business rescue process that we don't need to do the kind of due diligence that we would normally do. His reputation is on the line. For once, I'm going with him. I know him, I've worked with him. He's a very skilled, very trustworthy individual. If he says it's good, I'll go with that.
But I mean, Chris, if either of these deals goes bad, the fallout will be severe.
Yes, Jeremy, I think there's no question about that. The car power ships one, I'm not thinking quite the same league as the SAA one, but either way, President Ramaphosa is on a PR blitz, if I can call it that, to attract foreign investment. He's saying, we've sorted out the mess, we've sorted out the problems inside the ANC, we've got rid of the bad apples, we're putting people in court. A number of them will wind up wearing orange jumpsuits. Will we get the Guptas back? We're in the process of doing that. We're recovering some of the money. You can start to believe us when we say that we're serious. And these are keystone deals, because partial privatization of SAA and bringing independent power producers online, now investors are saying, well, okay, he's actually putting his money where his mouth is. I'll believe him. If these go wrong, but particularly the SAA one, they're going to say, oh, yeah. Same old story, heard it all before, empty promises. I think I'll take my money and I'll invest somewhere else. We really can't afford that.
Okay, let's end off with the week ahead. What's in store, Chris?
Well, two big numbers coming out this week. First off, I think it's on Wednesday, is the consumer inflation number, Jeremy. Forecast is 5.2%, up from 4.4%. That's for the month of May, and it's year on year. Just as everywhere else, China, I mentioned, the United States, we're seeing spikes in inflation because of all the money that's been pumped into the economy. The question is it going to be a short little spike coming back down to the 3.5%, 4% middle of the range for the Reserve Bank, or is it going to go higher than that? And the clue there will come from the producer inflation numbers, which come out later in the week. The forecast month on month, 0.3%. That's quite acceptable. Year on year, though, the forecast is for 7.3%. Now, 7.3% is high. Producer inflation down the line, 6 to 9 months, turns into consumer inflation. And I think that if we start to see a string of numbers that look like 7.3% or more as the producer inflation numbers come out over the next couple of months, I think the Reserve Bank and Governor Kganyago, who is notoriously hawkish when it comes to inflation, I think we're going to see some action. It might even get down to interest rate increases here in South Africa.
Thank you, Chris, for your views. Once again, we'll catch up with you next Monday. It's not always the best thing to end off on a down note in any part of, in any form of media, but just on behalf of the Mansfield Today team, our condolences to the Mabuza family on the sudden passing of a very dear friend of a lot of us on the show, Jabu Mabuza, who passed away late last week. On that note, we say goodbye to Chris, and we'll be joining you tomorrow with a legal look with Lance Brogden. Thank you for being with us, and we'll look forward to catching up with you tomorrow. From all of us here, bye-bye.